Welcome back everyone, this is Spencer with Numbers of Finance, and this is a market wrap video for Tuesday, April 2nd, 2019. Let's start off this video by talking about what we have seen in the markets over the past couple of days. In terms of price, we've seen a push up in the markets to a new local high. We're not quite at the all-time highs yet, but what we've seen over the past couple of weeks is we're kind of going back and forth in this couple dollar price zone area, and we've broken out of that. And what we've been talking about in our videos and our analysis of the market is on SPY, this 282 level that all eyes have been looking on. Everybody's been looking at this level as maybe not the be-all end-all, but a very significant price point. And the bears and the bulls have been fighting vigorously over it for over a month now. And what we wanted to see is a break one way or the other, whether that be to the upside or to the downside. We wanted to see something significant being broken. And so that brings us to the question, is this breakout that we've seen over the past couple of days the real deal? Is this what the bulls have been looking for that will bring us to new highs, or is this just another bull trap that will be faded and will be the start of a third leg down? It's a very hard question to answer. Only time will tell, but there can be cases made for both sides, and we're going to go over both of those cases. Starting off with the bullish case, meaning that this breakout is the real deal and that we are headed to new highs. We've seen consolidation. We've seen the same theme continue to this market. The theme of this market has been that we push up, we consolidate for a little bit, and then we push up again, consolidate, push up again, consolidate. We had a longer consolidation zone, but this could be the start of another push up. And the second part of the bullish case is that we are making a new local high, which I already mentioned. If you take this on face value, the bulls won this fight over the 282 level. This is significant. We're a couple percentage points above that right now, which is very significant, and we'll see. But now the bearish case, and I'll say this, I am leaning a little bit more towards the bearish case than the bullish case here. Starting off, why this might not be the real deal, why this might be faded by the end of the week or over the next couple of weeks. First thing is this 286 level that we're seeing. Now it's not as strong of a resistance level as what we saw here back at the 282 level, but it's certainly still a level to keep an eye on. I'll draw it here in for you. But we've so far in the beginning of this week, Monday and Tuesday, this has kind of been the price level that we've paused at. And again, it's just 2 days. Maybe we do go on to break through it, but we'll see. Why is this a significant level? Well, we have the reaction high back in 2018. Later on in 2018, you can see we tested it as a resistance, broke it, came back and back tested it as a support. Old resistance becomes new support. And then also, it's pretty interesting to see that the beginning of the waterfall selling for this large leg down that we saw began right at this price level up until we broke this 286 level from above back here in, what was this, October of 2018. Before we broke that, the markets were still operating under pretty normal circumstances, but once we broke that level, that's where we started to see some waterfall selling, where people started to realize that the market was not entirely how it was supposed to be acting. And so maybe this comes up to be a significant resistance level that we hit and we break down. What's also important to note about this seemingly breakout on the daily charts, is that we have very little volume to go with it. Similar to the last breakout of the 282 level that we saw, very little volume. I'll zoom in so that you guys can see the candlesticks. But again, here you can see we had a breakout of this 282 level a couple weeks ago. Little volume on it, got faded very quickly, and very similarly now, we can see Monday and Tuesday we had relatively low volume. We're not seeing what we saw a couple months ago. And what does this mean? Well, the major indication that I'm taking from this is that the institutions are not actively trading in the markets right now. They're not on the side of the buyers or the sellers really. And that can be taken both ways. You can look at that as a bullish from the standpoint that all the institutions are just waiting for a good point to get back in. They're waiting for the bulls or the bears to break this level, and if it's broken, then they're going to start to participate again. Or you can look at it from the bearish perspective, where the institutions have fear in the market, so they're not going to put their money in, which obviously does not bode well for the major markets. It's hard to say. We still need more evidence before we can officially say that this is the clean breakout. Now, what would that evidence be if this is the clean bullish breakout? Well, we'd like to see a weekly candlestick close above, significantly above that level. If you take a look at the weekly candlesticks, we can see this 282 level has kind of been a magnet for all of the candlesticks, where we see, sure, we get an intraweek pop here and there, but everything is usually around this 282 level, and that still could very much be the case for this week. If we come back down and we break below this 282 level, then this candlestick is not going to be anything outside of the norm. We're going to be right back inside of that grind that we've been in. And so maybe that happens, maybe it doesn't. We'll have to see. Before we move on, I thought it would also be important to note that we are extending the possible negative divergences on SPY. And this is not a be-all, end-all. Divergences usually play out. However, we have to see them confirmed before we know that they're going to play out. And these are not confirmed yet. We still have to see the market start to point back down. But if, say, Thursday or Friday in this week, we start to see a significant push down, that would confirm this, and we would see the momentum starting to head down, and that would confirm this bearish divergence. That's another reason why this price point, this 282 level, could be regained by the bears. But that's that for SPY. We'll move on. Taking a look at the Dow Jones, similar story to SPY, not the exact same. However, we are coming up to a significant resistance point. We do have a bearish divergence still intact. It's not as significant or as strong as it was on SPY or some of the other indices. But I just thought that since we usually don't cover the Dow Jones Industrial Average, that we might want to add it in there. And it does line up with our overall bearish convictions for the market, our macro term, our long-term multi-month bearish scenario. It does line up very much so. We'll see. This can be popped and we can head to new highs in the near term, but there's not a lot that's saying otherwise, that is saying that our bearish case is not still intact. Now, XLK I think is a pretty significant chart to look at, and there's a couple reasons why. And when I mean significant, what I'm talking about here is our long-term bearish case that I just mentioned. If we are heading into a bear market, it's likely that it is going to be due to the technology bubble popping. XLK is, of course, an ETF that is tracking the technology sector. So it's always good to keep an eye on it, and we'll see. And the reason that I'm showing you this right now is because it's approaching what would be considered a pretty ideal bearish or short selling case. A lot of reasons why this is approaching what could be a very strong sell point. And maybe this is what brings us that third wave down that we've been looking for in the broad markets, third wave down of a much larger bear market. But let's go over what we're approaching. We're approaching the all-time high on it. Incredibly significant resistance. It's a double top and everything. If we retrace all the way back up to this point, we are going to have a price resistance that we are at. We are going to have very strong divergence, bearish divergence. Now, the momentum is not sharply headed downwards. But you can get a very strong divergence in a couple of ways. Basically, all you need is where the price and momentum is very strongly opposed to each other. They're acting in very different ways. So you can have it where the momentum is heading sharply down, but the price is kind of flat. That's still a strong divergence. Or in this case, we can have where the momentum is kind of flattening out, the momentum is waning, but the price is still skyrocketing up. I mean, this price right now on XLK is nearly vertical. Very strong divergence. We also have an incredibly oversold reading on the RSI. If we do get back up to the 76 price level, that RSI is going to get right back up to being incredibly oversold. Again, this would be close to an ideal trade setup to short XLK. And if you're shorting XLK, that does not bode well for the broad markets. This could potentially, nothing is set in stone. You just got to look at the price points that could act as that kind of catalyst that could bring the market down for a third wave down. And then the last thing that I'll go over in this video is natural gas. We mentioned it a couple videos ago, sometime last week. But natural gas right now is kind of in between significant support and significant resistance. It's a fairly safe bet. I shouldn't say a safe bet. There's a pretty good chance that we end up coming back down and testing this 2.5 level on the NG futures /NG. Not a guaranteed, and this isn't a short trade because the risk reward is not favorable whatsoever. But again, it's something to keep your eye on, because once we do get down to this level, there's going to be a pretty strong buy opportunity, and we're just continuing the slow descent down where, you know, we have one green day here and there, but by and large we're heading downwards. And so I'll just end the video on that. If you liked it, be sure to leave a like, comment, subscribe. We greatly appreciate it. Until next time, make sure you get your numbers up.